Nvidia, and Jensen's talked about it, even from an open source or other models, the cheaper the models get, the more pervasive that gets. It's better for AI spend because the cheaper that gets, you're going to have more and more demand.
So we are going to hear from Nvidia after the close Wednesday. What should the market be listening for?
No one has a better perch around demand than the godfather of AI, Jensen Nvidia. I think it's really about when you look, they'll probably talk about that price increase that report over the weekend from a memory perspective driven. But I think it's really about what they're seeing from customers in terms of acceleration. We think overall AI demand, we've seen acceleration 20% the last few months. Wow. And there's one chip in the world fueling the AI revolution. So I think that this is a huge piece of the puzzle. When you think about demand, especially after what we saw from an earnings season, that was extremely strong, especially from the hyperscalers.
You write, Dan, that the biggest tug of war in the tech space is around AI sovereignty. What do you mean by that?
What that means is, and it's becoming more and more of a debate, really a hot button issue, is that the data, I'm not going to give that data if I'm a company to the model player, to an OpenAI, to an Anthropic. I can maybe use them, but there's going to be a sort of cordon off where I want control as a company over that data. And that's something where Nvidia, Palantir, there's a big focus, especially from CARP and Palantir, on sovereign AI data, because the view is that eventually, if you have my data, then ultimately, competitive-wise, could I marginalize your model? So I think it speaks to what's starting to happen is as you're hearing more maturity now in the AI space, where enterprises are focused more on who has access to their data and should they have more control.
Dan and I are this, folks, for a quick tech brief here. We'll talk Canada here in a moment. Good morning across America on Sirius XM, channel 120. Good morning across all of Canada. The House is fired up about Apple announcements after, I believe, Labor Day. What will we see from Apple, and what's it mean for their free cash flow and stock price?
I think for Apple, and I think investors now are starting more and more to recognize, when we've talked about a lot on the show, is that the consumer AI revolution, that highway, they're a toll collector on that, and that's going to continue to go through them. I think it's really, it's about not just the AI strategy, but now as you get to the latest iPhone that they release, what that's going to do to ultimate demand, because it lays out the foundation for everything we're talking about in AI is about enterprise. It comes down to consumer. What are devices going to look like? Where is most of that going to go through? Apple has, when you think about 1.5 billion iPhones, so that's why there's such a focus to see as they come out with their latest iPhone, not necessarily that there's going to be so many changes from a hardware perspective, but Tom, it's really also related more to the AI strategy that they finally actually have one now with Gemini.
So software earlier in the year, we saw a sell-off in software that I don't think I've seen. I can't remember. I mean, it's just software, you just own it because of the recurring revenue, the high margins, the free cash flow. What is the software call on the street these days? Are we trying to pick winners and losers? I mean, Microsoft was down 25% year to date at one point this year, but now it's rallied back to flat. What's the software call?
Well, Paul, first of all, I always thought that was a fictional thesis, that Anthropic was going to eat software companies' lunch, that these models were essentially, almost going to be destructed. I think what's starting to happen now more and more is the use cases get deployed. Software is playing a bigger role. That's what's happened with Microsoft. You've seen in Palantir, and you've seen with ServiceNow and a bunch of others. I think it's idiosyncratic to the point that there will be software companies disintermediated. And you look at companies, maybe the view back against when you look at names like Adobe is a good example. That's a good example of one where it's like, okay, Adobe, Intuit, how is their business model going to adjust? But it's a much different narrative today than it was 6 months ago.